Thank you very much, Christina, for that enlightening talk and a great way to start off this event. And Wes, welcome. And I hope you were able to enjoy the long weekend.
Well, thanks very much, Tom. I sure did, along with the whole Bricker crew, Little League Baseball and the like. But great to be with you this morning as well, and sort of back to the office.
Yep, same here. You know what? Barbecues and baseball can't be bad, right? Wes, everybody knows you as the chief accountant at the SEC, but can you just maybe take 30 seconds to talk about what your role at PwC is?
Sure. Thanks, Tom. Since the SEC in 2019, I came back to the firm to lead the U.S. assurance business. And then we broadened that, and I co-led the Trust Solutions business here at PwC. That's our combined efforts, whether it's tax compliance or specialized reporting like sustainability or core financial statement audits, financial statements, internal controls, and the like. That's where I'm spending my time currently, Tom.
And I know you and I are going to get into a lot of different things, but Christina touched on a few of those, but any initial reactions to the speech that she just gave?
Yeah, well, really powerful. And I think the point about context is massively important. The context of three pillars: market intervention in the markets when required. Of course, laying out a clear roadmap that's rooted in the Securities Acts, traced forward. I really appreciate the quote by Ben Bernanke that Board Member Ho incorporated as a touchstone. So the role of intervention whenever there's a failure. And then the second point about proportionality, that we're addressing the failure to the extent that it exists, but not more. And that judgment, of course, benefits from debate. And Board Member Ho really brought that to life with her own personal story. And then the final point about all of this needs to lead to trust across the entire system, because investors are counting on that. Investors are counting on trust in a system for our markets to work. And the context of AI and innovation that's occurring in our markets means we have to get this right. It's our opportunity to get it right. But the consequence of not being well balanced in it simply means that the work moves outside of the regulated space. So it's not free from consequences. Well, those 3 points I thought really framed out the points then for standard setting, whether it's NOCLAR, whether it's from quality controls, as well as others. There's a number of items on the agenda for sure.
And that's actually a great segue now into some of the things we want to talk about, right? Because when you take a look at audit policy, right, from 2002, let's say pretty much through the end of your tenure as chief accountant at the SEC, really there was always this overlay of Sarbanes-Oxley over it, right? In terms of implementation, we saw the initial bump up in restatements, but then that really went down dramatically over the course of many years. And we dealt with some of the issues regarding smaller accelerated filers and the like too, which I think have been worked out. So here we are in 2024. What's your impression of where things stand, both with the audit profession and what does the current business environment look like?
It's a really important question, Tom. Maybe I'll start with the business environment, and then I'll work my way to the audit profession, because context really matters. And Board Member Ho really got us thinking about what's happening in the markets today, and why is it so important to get this right? It's important to get this right because it's important for the country. Whenever the country loses trust in the business environment or business disclosures, I love her phrase, companies don't get the gas they need in order to operate and grow and compete. That harms us all. And so we're in a period of, what does that business environment look like? We're in a period of significant disruptive change. PwC did a survey of US CEOs. 44%, Tom, 44% said that Gen AI will impact their business, and they're moving forward already. Of course, that's framed around productivity and efficiency, but as Board Member Ho points out, Gen AI makes people better by augmenting people plus technology. We live this in our daily lives, it'll make us better at work as well. So 44% making investments. The second point PwC did a survey on with CEOs. Now, this is a global number. CEOs see their business models as changing. 45% said even within the next 10 years, absent a redesign on their business model would not be economically viable. So businesses are changing, business models are changing, oftentimes technology, but certainly not limited to that. There's a lot of other transitions. The third point I think is really important. Business leaders, CEOs in that same survey said 88% of my technology investments don't deliver on the returns that I initially planned. So if I start with the context, technology has a significant reshaping effect. We have to change our business model, and it's incredibly hard to execute. It's not for lack of effort, it's incredibly hard to execute. That's the landscape where we have to reskill people so they can be successful going forward. We have to change our business processes so that they're fit for the future. We have to change the way we work, and we have to create value all in that process while disclosing to investors where we are. Well, that's a big mandate. And so it's the context for CPAs. How can CPAs be relevant in that? Tom, they're incredibly relevant because CPAs bring discipline and governance and trust in periods of change as well as periods of stability, but especially because CPAs bring a multitude of capabilities. Board member Ho framed it in terms of expertise and objectivity, and I think that's really appropriate. So my optimism for this future of the CPA profession has never been more bright. My optimism for us to get this right, both the public sector as well as the private sector, because we have to get it right together. This is the work that the profession will do. I did want to hit maybe just the point about the CPA pipeline. Sometimes it gets a lot of focus, and it certainly has over the past 2 years. I think it's useful for all of us to know that the profession worked to form a national pipeline advisory group. Draft strategic report was issued. It's now available on their website. You can search it. It was issued on May 18th. That work will continue as the draft strategic report gets finalized and then shapes decisions about how to move forward. But here's a key stat that sometimes gets overlooked. You can find this in the AICPA annual report for 2023. The number of CPA applicants taking the exam is actually up. It went up from 22 to 23 by almost 20%. There's now 79,000 CPA applicants in 23, and we see momentum there. So the value of the work that we're doing in the private sector to build the pipeline of the next generation of CPA talent is important. Of course, there's a lot of work to do. At PwC, of course, we've published a commitment to invest 1 million hours over the next several years, 1 million hours of making sure that students get the information they need to make really important career decisions, that professionals get the support they need to stay in the profession, to get the education and the credentialing that will help them be successful. So Tom, that's the business landscape. That's the audit profession. I see more opportunity ahead than maybe, as economists sometimes use the word dismal outlooks. I don't see a dismal outlook here. I see relevance.
Wes, thank you very much for that. That is a great overview. I mean, this is not a sleepy profession. We did an event last year with the CAQ on technology, and I think we're going to want to come back to that. Maybe after Christina Ho's group, issues their report on technology and the board. I couldn't agree with you more fully in terms of the fact that people are always going to have a very critical role here, particularly when you're talking about objectivity and context and judgment. And I want to maybe get back to the personnel issues in a little bit. But but let's swing over and talk about audit quality
Yes.
for a couple of minutes. And this is audit quality is very important. I know the yardstick that we use is restatements, and if you take a look at restatements, there's been a dramatic increase, I would argue, in terms of audit quality over the past couple of decades. But this is, there's always been a lot of tension as to what audit quality actually means. We're seeing a lot of speeches and enforcement actions coming out of the PCAOB regarding audit quality, and discussion around the new firm and engagement performance metrics proposal. So, Wes, how should we be thinking about audit quality in 2024? Obviously, audit quality today is different than it would have been, let's say, in 2000 or 2010, right? So how should we understand audit quality, and how important is it that there be a linkage as to the marketplace's perception of what audit quality is, and let's say what the PCAOB's perception of what audit quality is?
It's a really important question. And I think every leader, whether you're a business leader in academia, whether you're a leader at a standard setter, a regulator, or a firm, is looking at this question, needs to be looking at this question, because ultimately, quality of products and services really guide relevance over time. And so those questions are inextricably linked. I guess the starting point that I come into this question is really, what is the foundation? And Board Member Ho talked about the Sarbanes-Oxley Act as addressing structural points of failure at the time. And I think by any measure, when you look back, that's really worked. So what were they? An independent expert audit committee to oversee the buying and oversight and compensation decision for auditors. That's been incredibly impactful. The introduction of integrated audits, no debate, that's important, but of course it needs to be phased by companies depending on their life cycle of coming into the capital markets, their size and so forth. So we've tweaked that over time in the past 20 years. Another area, increased auditor independence to make sure that there's real objectivity going into the work that we do. Of course, that always needs to be assessed so that it's proportional and we get the benefits of objectivity without restricting unnecessarily the marketplace. And then rigorous oversight of auditors. Of course, that's beneficial as well. So we have the right structure in place, I believe. The second point then is, how do you really get your hands around what it is to judge whether it's working or not? And that's really important, because an audit is rooted in expertise, it's rooted in judgment. It's also benefited by technology. Let me say that differently. It is a people and a technology service that comes together, and it will come together differently depending on the firm, the nature of the client, the business model, the people on the ground, et cetera. For that reason, what I believe very strongly is that audit quality is multifaceted. It's hard to reduce it to a single measure. It's not like you can put a nutrition label on a can or a bottle or a package where you know the ingredients. That's because there's not standardization in the ingredients that goes into a great audit. It's much more human than that, and it's much more technology driven than that. And so it's not standardized. If you were to standardize it in the same way as a nutrition label, you'd peel away many of the benefits, Tom. So it's multifaceted. What's a better approach then to communicating a holistic assessment of how an audit is delivered well and is delivering on audit quality objectives? Well, it's communicating through the eyes of firms and firm leadership and firm management what's going into that approach. And firms are doing that, including PwC. We started a number of years ago with an audit quality report that lays out the multiple dimensions, both input measures, output measures over time, and management commentary about not only the outcomes that we see, but also the improvements and the investments that we're making. Because the approach here, I believe very much, is to communicate how a firm is delivering on its mandate for quality so that audit committees with that right independence and expertise can make more informed decisions about their selection and oversight of an auditor. Let me contrast that with what sometimes is picked up. Sometimes what gets picked up is a deficiency count in PCAOB inspections. And that data point is useful, but useful for very specific purposes. The PCAOB for it itself and every inspection reports cautions that deficiency rate percentages are only calculated relative to the audits that are inspected. And the PCAOB is clear, those rates are not a measure of the frequency of deficiencies across all firms' audits, nor is an inspection report a rating tool. That's important. The PCAOB has been very clear in that, and I think it's beneficial for the marketplace to know. Here's another measure that frankly is even harder to parse, but sometimes gets picked up and talked about as a proxy. And that is a deficiency rate across all audit firms. So if it was complex for a single audit firm, when you average it out across all audit firms, it's even harder to parse. Let me illustrate this. The PCAOB communicated a 40% deficiency rate for 2022 inspections. Well, within the largest firms, the big four firms, that number is 24%. For PwC, for example, that's 9%. So if you just take an average, you don't get the differentiation that's important for the marketplace to have as a signal of what's working, what investments are working, and how to really make progress. Differentiation on audit quality is critically important in order to find the path forward. But equally, even in deficiency counts, it's important to do a deeper dive. That's why getting into the details of inspection reports can really be helpful. For example, in the past 3 years, PCAOB deficiency rates within big four firms, 55% of them across the big four firms, deficiency rates were ICFR related. Tom, you and I have worked on ICFR issues over time. That is a newer area of disclosure. It's a newer area of reporting. It's about 20 years old, seems old, but in the context of financial reporting, which is multi-generations old, we're still maturing in the quality, the nature of guidance within companies as well as audit firms. And there is room for disagreement, sometimes even reasonable disagreement about risk assessments and whether enough work was done or not. So majority is ICFR related. I don't want to minimize that because getting controls testing done well is important, but that's, I think, important to know where the majority of deficiencies are coming from. Let me go to the other side where in preparing financial statements, one of the core functions of an auditor is to assess whether the financial statement estimates, which can impact income, were done in a faithful way to the standards. This is the benefit of an objective look at big estimates like impairments or estimates of revenue. Across those same four firms in that same period, Tom, there were only 11 deficiencies cumulatively for a 3-year period. That's only 5%. So that's the category. If someone wants to check in the inspection reports, that's the category where the PCAOB uses the label, the auditor did not sufficiently evaluate significant assumptions or data that the issuer used in developing an estimate. You'll find 11 across the four major firms cumulatively over the past 3 years. I say all of that to say we can learn from quality. It's kind of like a growth mindset. I believe we're strong today, but we can also be stronger tomorrow. Both statements can be true at the same time. That's what I tell my kids. And that's what I believe in this place as well. We don't need to have a fixed mindset. We're strong today, we can be stronger tomorrow. And so the investments that we're all making are for good reason, but it also takes the entire community. And I think the health sector gets this right. For example, CMS, the Center for Medicare and Medicaid Services, publishes a quality strategy on their website. It's 8 goals, and it's open that everyone is involved in achieving progress, whether you're a provider, whether you're a regulator, whether you're a standard setter, whether you're an institution, whether you're a patient, or whether you're a guardian of patients. Everyone has to be at the table to achieve better outcomes overall. I believe a multifaceted approach rooted in conversation and rooted in proportionality really makes a difference, Tom.
No, Wes, I mean, I'll just give a very quick editorial comment on that too, because I mean, as you referenced, we've done a lot of work over the years in terms of internal controls. But one of the reasons why we've always talked about maybe having a public company advisory group within the PCAOB, right, is sometimes you need to have that conversation, particularly around the internal controls, because sometimes controls may not be needed. Sometimes they are, and it allows for the regulators and the companies and the profession itself to have that conversation so there could be a better understanding. And I couldn't agree more. Sometimes deficiencies are just a difference in reasonable judgment, right? And that's a whole different issue. But let's talk a little bit about the shifting role of the profession too, because, and I think this may go under the radar for a lot of people, but when you take a look at the recently completed SEC climate rule, the California climate disclosure law that was passed last year, they have a very robust role for auditors, and obviously those 2 initiatives are still in the courts, but there's that concept though of giving the auditors a much bigger role in very important issues. But then we also have NOCLAR, the proposal on non-compliance with laws and regulations, which puts the auditor more in the role of an umpire as to whether or not something is legal or not, or should be proposed. And that's been controversial, and that sort of builds upon a process that started with critical audit matters. So we're also seeing both the role of both domestically and internationally, how people are beginning to look at auditors to do other things as well. So with these changes that we're sort of on the cusp of, how does that impact the audit profession broadly? And then I want to tie it in with the second part of going back to something you had raised earlier too, is employee recruitment and retention something that's on the board's radar, particularly with these very expansive proposals?
Well, it's a really important question, and in the area of new standards like non-compliance with laws and regulations, I think that's one where we all stand on the side of good governance and the auditor being relevant. The auditor being relevant in identifying where there's a connection to the financial statement audit. Congress has settled this question for us. There's a point of relevance, and that's why we've had a long-standing set of rules, standards, regulations in this space. It is complex, to your point, as many of these topics are. These topics occur in the context of an overall system of compliance. Management has responsibility in the context of their business model for compliance systems that enable a business to comply with the regulations that are relevant to it. The board has a role in oversight of that, and the auditor has a role in identifying non-compliance that can have an impact on the financial statements. In order for that system to work well, everyone has to be at the table to talk about the scope of testing that's relevant and useful without the auditor crossing the line into an internal function. Board member Ho talked about a management function risk in this space, a risk to independence. The Sarbanes-Oxley Act was clear that internal audit functions are outside of the scope. They're impermissible. They're categorically impermissible for the auditor to take on. And why do I raise it in that way? Because getting the right scope to non-compliance, a set of responsibilities, and I would say an opportunity for the profession around identifying potential instances of non-compliance and raising them to those charged with resolution of those instances of potential non-compliance. To really land on a change in this area that's sustainable, I believe requires everyone to be at the table. As Board Member Ho talked about, the PwC held a roundtable. I believe that's the start of a good discussion about a really complicated area of landing on the right set of roles and responsibility, the right opportunity, because of course firms have multidisciplinary expertise. I think that's a point of strength. We have capabilities around compliance. We have capabilities around forensics testing, et cetera, but we need to apply those in an appropriate way to ensure that independence, role, and value of our work is well understood and is in the context of a multi-layered system. Let me hit sustainability, Tom, because you also referenced that. That's another area of opportunity. And so I've focused my attention on sustainability, again, from the perspective of investors who want to make sure the numbers are right. Just the same as investors want to make sure that a company is complying with relevant laws. So the question is where to draw the line between what management does under board oversight and what an outside party does in bringing assurance to those. Of course, the SEC in its adopting release decided to go beyond the regulated licensed profession and to open it up, the assurance provider to apply, whether it's PwC standards, AICPA standards, IAASB standards, or even entirely outside of the profession, ISO standards in delivering reasonable assurance, still using that term in the same investor protection document, and being provided by non-CPAs. So the SEC made a decision to go beyond the PwC in this instance. That I know is a source of a lot of discussion about drawing the right lines around that. But that's my point about when you look at relevance, when you look at these big areas, it's in the context of the overall system and then finding the right lines. To me, landing on good judgments there requires a lot of discussion on the attractiveness of the profession, on the attractiveness of talent. Look, I engage with a lot of accountants and students who want to be relevant. They want to find purpose in their work, and whether it's sustainability, whether it's climate, whether it's compliance, whether it's financial disclosures, they want to be relevant. As a technical matter, I would just note, generally, labor market regulators in the profession is at the state level, sometimes at the federal level through the licensing, not generally at the federal level through the PwC, although I think it's important to take note on the overall impact of the attractiveness. Yeah.
So Wes, I know we're beginning to bump up against time, but let me ask you one last question, two-part question. And I think this sort of will sort of tie things up, but with what we've been talking about here. But one is, even though the PCAOB directly regulates the audit profession, right, there's ripple effects that, the actions that they take impact others, right? So obviously there's a big impact on the corporate issuer community. So my two-part question is, with all the change we're talking about that's going on or being discussed, and, some of it is regulatory driven, some of it is technological. One is the corporate community paying enough attention as to what is going on with audit policy? And then two, from your vantage point at PwC, what is the profession and the firm doing to ensure a vibrant future for the profession as well?
Thanks very much, Tom. Look, I think my answer would always be people aren't paying enough attention to this space. And that simply reflects that I believe more participation, more dialogue is important. There's almost the fundamental relevance of a good disclosure system and the need to protect that national treasure that we have requires everyone to be investing in it. Because if it's not maintained well, it will erode, it will corrode, and that's harmful for all of us. So when people write letters, I think it's helpful. It helps inform the debate even better. Whenever we have roundtables and discussion, it's informative across all of the broad connections that we need to make because our disclosure system is multi-layered and it's multi-party. It's businesses and investors. It's board members, it's auditors, it's regulators, and other intermediaries like the distribution of disclosures. So it all benefits from people being at the table. For example, if you remember, Tom, and I know you do, when we put revenue recognition changes into the entire system or leasing changes into the system, those were hard, but they benefited from a task force that met and talked about areas of judgment, areas of change. You also asked about PwC. We are very focused on promoting and building trust in society and solving important problems. That's our purpose statement. It's been our purpose statement. And that's true, especially in this area, that we are investing, for example, in the future of the profession. We announced commitments, 12 different commitments across 5 themes that go all the way from accountability to quality, engagement, independence, and transparency, because we think that's really important for firms like PwC to take our responsibility seriously and to make big investments. We've invested in technology. We've talked about next generation audit. It's $1 billion investment in not only the people, but also the tools and technology that will help us move into the future, not just public company audits, but also private company audits as well. And then, of course, we're active in the next generation of accountants, investing time to make sure that what we've received as a great legacy of public accountancy that serves the public and benefits from everyone being at the table is also something that we hand off to the next generation. And that, Tom, I believe is work that benefits from the work that we do at a professional level with the PCOB, with the AICPA, and with our global counterparts, because no one can do this on their own, or at least not do it well on their own. This is a multi-party system.
Wes, I could not have said that any better myself, and I want to thank you for the time you spent with us. Obviously, we could have spent a lot longer on this, but we, appreciate your leadership and partnership over the years on many important issues, and look forward to continuing that relationship.